Good morning, everyone. Welcome all to the webinar or the meeting just to share the preview of 2025 per index, that is Sensex or Nifty. At the same time, couple of index, couple of other indices as well as few couple of stocks, which looks good for the year 2025 to focus on. To start with, year 2025, I'll be first starting this not from the charts but from a different perspective today. Is this Sensex chart visible to everyone? Is Sensex chart visible? And I request everyone to kindly unmute yourself when you want to speak,
Yes.
and at the same and mute again, because while being on the charts, it won't be easy for me to go back and check the chat dialog box. So you can unmute yourself, speak, and then mute your
Yes, it's visible. Visible.
Thank you. Request everyone to please mute when you are not speaking, because there is some background disturbance going on regularly. Thank you, everyone. 2025. Why this year holds very important? The total of 2025 comes to 9. 9 is considered as some important number, whether you talk of Vedic astrology, whether you talk based on the GAN or numerologies, anything. What does the number denote? That's not point for us. But when we look at the history, because 9 has a significant role across. And when we look at the history, what has market done every time when the sum of the year was 9, there is something interesting pattern repeating. Before 2024, the last year for the 9 was before 2025, previous year where there was a 9 was March 2016. And if we look at the 2016 year, observe this move. There was one low and then one side rally. One way rally. Low was, I think, on the 1st of the March or 2nd of March, something on a budget day in 2016. And then there was one way rally all the way till September. 6 months, 5.5 months or so, somewhere in the month of August, and they might have been at top. I'm not going in a daily chart. And before 2016, 9 comes to 2007. And here is the 2007 start. January 2007 is this one. If we mark it, here you again observe a low in March and then a big rally all the way till September, till October. Again one way. Before 2007, number 9 comes in 1998. Here the case was reverse. Here market rallied first, but after that there was one way slide. This is what I said just now. There will going to be two big moves in the market in 2025. Direction, let market decide which side it is going to be and which month the bottom or top will be. But if you are able to capture the one move in all these years, the move was somewhere around 15 to 20% one side. Now 15 to 20% move one side. In the present scenario, it gives somewhere around 3,000 to 4,000 plus points. In fact, 3,500 to 5,000 points of Nifty. I think that's huge. Now this is with respect to number Mars. One more interesting thing, which very few might have thought or seen, I hope. 1st of the January, that the year has started on a day, Wednesday. Year has started on a Wednesday. Since 1990 till 2025, this has happened around just 4 or 5 times in history, where the year has started on Wednesday, and it also has a pattern. This was before this was 2020, January 2020, first was a Wednesday. One can check a calendar too, and if my reading was wrong, you can update me. Yeah, Jan 2020, 1st of the Jan 2020 was Wednesday, and this is year 2020. Everyone knows. There is no need to explain anything on that. There was also one side move. And before 2020, was before that. Here comes 2014. Again, one side up move. Before 2014, the year comes 2003. Before 2014, the year comes 2003. And here is the year of 2003. First, there was one slide for 3-4 months, and then one-way rally. Before 2003, (1997). Here is the 1997. This is the year where it has given a rally, say from 3000, Sensex from 3000 till 4400. That's somewhere around 40% plus move. And then again it gave a dip back. There were 2 opportunities in that year, but rest all the 4 years. And before 1997, 1992. Here comes 1992. The starting point is here, and a big rally. There was a crack too. This rally was also very big and very fast in this case. There was this Harshad Mehta thing happening at that time. So all the 5 instances, as per the Wednesday date of 1st January, there have been a big move, big opportunity in the index. At the same time, we have seen maximum of those were the moves on a upper side. There was a one big opportunity on a rally towards upside in all the 5 instances. As per the number 9, there have been maximum instances of upside, and there was a one instance of a big slide. Both of these point to something. One more interesting thing which I think I missed to highlight in those things. Whenever there was a bottom before a rally in all these years, those bottom held for couple of for some better time, which means those were the strong bottoms. They were not a bottom that will break again soon or so. Whether it's based on the 9 or Wednesday, when we combined these years, max number of the time those bottom held for a better period for the coming time. Which means if there is any slide in 2025, till where the slide will come, where will it stop, those all are chart based, those are secondary. Just this information we need to have back of our mind is when you find a market little attractive based on the any crack, say indices come somewhere around 19 to 18 P or anything, and I'm You can start looking for an investment opportunity for a long term, because those are not going to break soon. It may take at least 2 years, 3 years or so, and they are going to give good risk reward opportunities to build a wealth. These are the years, and this is the year 2025 to capture that opportunity if it comes, if the market throws. Will the slide come or not? Even I don't know anything, frankly speaking. But if at all it comes, we need to be prepared. We'll always have some cash in hand to deploy if you get an opportunity, or whatever trading you are doing, keep the profit aside. Do not deploy back trading again. Keep those profits aside so that you can invest them when you get in any opportunity. Now, charts wise, we will always be alert. I'll be always guiding it on a daily basis, as well as we'll be having a regular webinar. So we'll be knowing the market structure. The regular basis, we'll be analyzing it. So we'll be knowing regular market structure. So I'll definitely alert if at all after a slide where there is a bottom potential, there we can deploy maximum. Although we won't be catching an exact bottom, I'm sure I won't be catching exact bottom, and I'm not interested to catch an exact bottom. What I'm interested is to start accumulating or start investing when the opportunity arrives. Whether index may go somewhat down after that also doesn't matter. But what we'll be looking at is the future potential. Now I'll move to Nifty chart to look at the chart analysis for the coming year. This is Sensex. Let us look at Sensex itself first. What index has been doing since last few years? If you look at the yearly chart, since 8 years, it has been a green candle. 1, 2, 3, 4, 5, 6, 7, 8. 8 green candles. And if I consider this also as a green candle, although it's a doji, that would become a 9. 9 green candles one side on a yearly chart, which means on a yearly basis, there has been a big trending move in the markets. But if you look at the percentage move from 22,000 to 85,000, almost 4 times from the lows. There were dips, there were consolidations, there were panics, everything happened within these 8-9 years. But since 2020, after 2020, there hasn't been any big correction of more than 20% or so. Last correction was somewhere around 18% or so in 2021-22. There hasn't been any correction in a market or pullback in a market which dropped by around, say, 20% from a top. In 2021-22 correction, if you look at 62,000 Sensex high to the low of 50,900. It means somewhere around 51,000. Just short of 20. Has been the largest correction in last 4-5 years since 2020. And this is the longest stretch of 4 years where indices has not dropped more than 20% from the high. Even in a period of 2003 to 2007, there was a drop of at least 20% couple of times in 2006 or 2007 something, and even before that. So this is the longest stretch where indices has not dropped more than 20% from a top. I mean from a top. At the same time, this has also been a longest stretch where, although a market has rallied big one side from point to point basis, but at the same time, there have been enough consolidations and pullback correction, which means the strength of up move was not so vertical, which was observed in the previous periods. So probably that might be the case. There hasn't been any big 20% plus corrections, or we might be getting one in a 2025 where indices correct by more than 20%. And if at all you see that index is down 20% from the highs, you can start building your positions for a long side, slow and steadily for investment purpose. Because anytime after that, we may see some good bottom. Now, this is done with few different things. We have covered multiple things, and now come to proper charts, price action basis. What does this look like? On a monthly chart, always remember one thing when you're doing a chart analysis. First focus on a monthly chart, then move to the weekly or daily as per your trading style. But for the identification of a major trend or some bigger, larger picture view, monthly charts are the best. Ignore these things. Some study I was doing, so they are kept as it is as of now. Because I was in the mid of some kind of some different study yesterday night. If I remove this, then all the works and calculation goes away immediately. Let us move to Nifty future for a better picture than this mid chart disturbances. Index has formed some good bottom around 23,200. Kind of double bottom around it. 23,200 was 277 in this and 230 something in a spot chart. From there again there was a dip till 23,400 change, almost just 1% difference, and started rallying. Nifty has already given somewhere around 800 points move from the recent lows. When we look to daily chart, ignore this first Jan freak lows in this. And now if you look this from this low, index has formed most like a double bottom and then started rallying. At the same time, it has crossed the recent or say last swing high in a better way. If you look somewhat nicely, what does market do on a daily chart? It has crossed the previous swing highs. That is, here it has crossed the previous swing high. This was the previous swing high. And then started sliding down. Probably this is kind of a pullback. Now it's again started moving up. What remains important to be seen is in a coming days, if index is able to move about 24,250. Why I say this figure? Because that's a 100 EMA, which has been a very important reference. We have observed in a main reversal session also why this forms a very important EMA. So once index start sustaining above this, we may expect a move towards 24,800 plus, which means crossing these highs. The probability will be high of crossing these highs. So that would also be like from the lower high, lower low pattern, index will be moving from higher high, higher low, again higher high pattern. As per Dow theory, the trend has already changed till now, and this will be much further confirmation once it crosses 24,800 plus. What will be the targets on a higher side? Once it closes about 24,250, sustain about 24,250, the move immediate target would be somewhere around 24,800 as I said. But if it closes above or sustains about 24,800, that would be like a some consolidation of last 3-4 months and then a breakout. A slide, up move, slide, and that would be trying to break out. On a larger picture, it may also look like a W pattern if one look at the pattern study. But on a Y curve pattern, the not exact accumulation phase, this does not look like a proper exact, but more or so this looks like an reaccumulation phase. That's also a accumulation phase, not exact textbook accumulation phase, but an accumulation phase which we can consider, because this is like a going down, forming a spring type of pattern. That is a false breakdown and moving higher. Retest of this, and now it will move higher. So once it sustains about 24,800, the move can be little faster than one can imagine. As per our volume expansion also, it also points to same thing. Once it sustains above, this has been a highest volume since this slide. Now once this is crossed, that's 24,800 plus in a spot and there's 24,900 in a future, that would be crossing these two big volumes, which are around 1.2 crore, 1.1 crore. Ideally, these volumes, once index broke down below this, these volumes should have a potential to break the recent these lows. But what happened? This slide was going on nicely and suddenly this slide got arrested around this 23,500 also. Gave a pullback. In another attempt, it tried to break below that, but it did not. It failed to break below this and it reversed strongly. This minor breakout, which was a 24,000 spot and 23,500 spot range, got broken out on a higher side. This was already updated in a group in a live markets or in a morning update. Same thing, I'm just explaining on a charts. So this breakout has a target towards 24,500 plus on a spot and 24,700 plus on a future. So interesting would be once it crosses 24,800 or 900 spot or future as whatever, that would be a good consolidation breakout. Now this consolidation is not a small. Remember this, it would be almost 2.5 months of consolidation. That breakout we'll be looking at. And most importantly, price wise, it is a 1,500 points breakout. Approximately 1,500 points consolidation breakout. This would be giving somewhere around targets toward new high plus, about 26,200 plus. Now, what happens if this does not give a breakout? Alternative scenario. Where do we look for the short opportunity? When do we short? Immediate reference level would be 24,000. And below that, 23,850, the being the low of this high volume candle. Once index Nifty future trades a hole below 23,850, that would be the best place to look for short, closer below 23,850. Stop loss would be 24,000, 24,050 based on the what's their high that day and the previous day, whenever this breaks. Most important level for the markets as of now is the recent low, which it has formed somewhere around 23,200 and change on spot and future, 270 on a spot, future 230 or something on a spot, whatever, round figure 23,200. Because once that level breaks, downside move towards 21,500, 600 triggers. Might even test this June lows, election result lows somewhere around 21,200. If it breaks below 23,200, the targets triggers are somewhere around 21,200. That should be the move, and that move is going to be very fast. Why so? Back-to-back high volumes, it failed to take off, and these high volumes again failed to take off. These are going to give a big repercussion on downside when this breaks based on the volume. And price wise, it will be ending at 2 months of 2 months plus consolidation. It means what we are assuming as an accumulation phase will be a distribution phase. And when a distribution gets completed, what happens is, just for a terminology purpose who don't know, the market moves on a 4 patterns as per the Wyckoff theory. That's accumulation, markup, distribution, markdown. So this was a markdown phase and this was a distribution phase, and once again markdown will begin. markdown moves are trending moves. What was this? Similar to the one side move with trigger. That would be giving somewhere around 200, sorry, about 2000 points move. So where do we initiate a short? If you want to be a safe trader, wait for 23,200. But my suggestion would be once if 23,850 breaks below and holds below that, one can initiate at least 50% short position. Why to wait for 23,200? You are getting a signal 600 points beforehand. Risk will be around 200 points, but the opportunity size is very big. If the down move contains 200 points risk for a 2000 plus points move, I think it pays to initiate a short. Risk reward is very, very lucrative. So what did we notice till now? 2025 is going to be an excellent opportunity. One is prepared to capture it. There is a potential of very big moves. How do we capture those moves? We have seen an immediate reference level. Apart from this, anyone has any doubt? You can ask your query. Else we move to some other indices and then the stocks. No queries? I hope we have started a recording, right?
Oh, hello, can you hear me?
Yeah, please go ahead.
You compare with budgets also in general, or but how market has fared with budget?
Look, when we look at the budget-based analysis, I have done this in last year and a couple of years back as well. There is no particular strong correlation.
Okay.
But what we are looking in a market as a trader is to identify the simple patterns, which we can get at a low risk and high reward opportunities.
Got it.
Now, astro-wise, this year is also very critical. I will come to the astro patterns or other thing when we start a proper learning webinars. Because right now I don't want to club with too much of what we say non-market information to be confusing us. There is also a pattern, whatever the astroplanetary transits which are happening this year. There is one very significant pattern as per that as well. And this year there is a multiple interesting astro patterns playing out. There are, if what we say, just to give a brief little idea in couple of minutes. In single year where Rahu, Saturn, Jupiter, the slow moving planets will be changing their signs. And this is not the first time, they have done also recently. And they keep on doing every, say, 8-10 years or so. That is within a single year, all the three changing signs. Most important is this year, Jupiter's speed is going to be very high. There will be a phase where Jupiter will be crossing a sign within 5 months. Normally, Jupiter takes 12 months to cross one sign, to transit a one sign, approximately 12 months or so. This year, there will be a phase, although it will be for a shorter period, it will enter the other sign, but crossing a single sign in 5 months, this is very rare phenomenon of Jupiter. The speed of the Jupiter will be very high. So little bit implication of that I have to study again. This is something very interesting and very different. This has happened very, very rarely. So I don't think last time when it has happened was there was any market in work, Indian markets data also. I have to check a lot last time when it has happened, at least little better speed than not even 5 months, it might have taken 7-8 months. Even if I get that data, that would be interesting to me. So once I do some astro detailed studies, then I will be covering astro. As and when the planetary transits are happening, I'll be keep on updating, because if you have gone through the this year's note, I have clearly mentioned in the poster that little bit of astro will be covered. My focus is to, so that one can, the important astro aspects which normally affects or impacts the trading specifically in very short-term trading as well as the longer-term pictures. Those I'll be covering during this year. And I am also just as learning as astro. I'll be sharing just what I've learned over the past few years, and I've observed them working. It's not that I have just what I've learned I'm teaching or I'm sharing those knowledge. what I have learned and then observed practically on a charts, those I will be sharing, not everything what I have learned from others over the years. And I keep on reading regarding astro, financial astro, or normal other astro. So whatever I find something interesting, I try to implement, look at them on the charts in the historical pattern. And is there any regular pattern repeating which we can capture? Those are important, not every other astro event.
Sure, sir.
Hi, Anand. I had a
I just,
question.
yeah, sure.
Just wanted to know when you do your analysis, I mean, do you track the spot charts and future charts simultaneously, or when do you choose to analyze on the future chart, and when do you choose to analyze on the spot charts?
When I am looking for a larger picture, say monthly view, 2 months view, 6 month view, anything, I look at the spot chart. But when it comes to purely trading diluted view, I look at the future charts. The reason being, although price action basis spot chart is better, but traded volumes in the spot are derived volumes, but traded volumes on futures are actual proper traded volumes. Volumes in the future is a traded volumes. Volumes in a spot is a derived volumes. And when as a trader, we are looking at trading for a 1 week, sorry, 1 day, 2 day, or 1 week, maximum of month basis, because in F&O position does not hold beyond that, as per month options are not too liquid at the same time, as well as the price difference or premiums, you can say, they are very not so rewarding in a farmer. We know that. So as we are trading for very short term, impact of short term traders position more on a charts or a trading position of the smart players is will be having more impact for a very short term. So that's important, and because of which I look at the Nifty futures charts for analyzing daily moves, but I look at the spot charts for rest tail, whether it's stock, whether it's index larger picture. I look at the spot charts. Even in a stock, I don't look at future charts. I look at spot charts, because in the spot chart, the volumes are actual traded volume, not a derived volumes.
Okay, got it. Thanks.
Always the spot will be giving a much better picture from the when you are looking for a taking any some positional bets, even for 2 months, 3 months bet. No, because futures volumes or futures data or F&O data, option data, everything is just 1 month old. Before that 1 month, although the contract is available, but the volumes are very significant. The traded interest is very significant, very less compared to what we get in a spot charts or spot volumes. Because of which, for all the other analysis, I always give focus to spot chart, whether it's cash stocks, whether it's future index, whether I'm looking for 2 months, 3 months, or even in a cash stock, when I'm looking for even just 1 month perspective. I'll be looking at the most important the spot chart, not the future chart.
Okay, got it.
Now, first index will be covering the major Nifty component, Bank Nifty. Observe this move of Bank Nifty. What did it do since July? 54,000, 50,000, that's it. A index which is known to give a big moves, being in such a narrow range for more than 6 months. When was the last time such a thing happened? Can you see any such minor consolidation in Bank Nifty previously? For 6 months. Here also it was trending, although it was a larger picture in a minor range. In some range in a larger picture, but it was a faster move than giving a trending moves. What does such a consolidation tells? Here it was for 4 months. Here it was again for a 4 months. Here for a 4 months. Sorry, 3 months. This was the case of 6 months in 2012. Even though the 2012 move, which we have seen, there was a couple of big spikes, one side and upside and downside. Sorry, downside and upside. In this case, it has been broadly just within that range. $50,000, $54,000 with the multiple attempts, testing 54,000 as well as 50,000 couple of times, so 3-4 times. What does this indicate? Even if we ignore this election result a day move or couple of few sessions move because of the election impact, even in June, most of the time it was within this range. 49,800 downside might be and 53,000 change on upside in this most period of the time. What does this indicate? Mostly is whenever this range breaks, this is going to give a very good opportunity. Now, will it break 50,000 and go lower, or will it move higher side, crossing 54,000 and going much higher? Actual level comes somewhere around 53,800 or so. I'm using a round figure of 54,000. Back to back, where it got resisted was somewhere around 53,500 to 800 zone over the last 6 months. This is a monthly chart. There was just one spike of above 54,000 in the month of September, where it formed a top. Whenever this is going to give a breakout or breakdown, break of this range is going to give a very good opportunity. And this is what will be driving a Nifty. If Nifty has to move higher, it cannot go easily without Bank Nifty. The up move won't be smooth if Bank Nifty is not participating. If Bank Nifty is not participating and Nifty has to give a good trending up move, then there has to be support from IT as well as oil and gas sector combined. When I say oil and gas sector, it is RIL and BPC, the stocks in the index as well as IT. Those two combined will have to support index a large. At the same time, Bank Nifty not should drift a lower side. It has to give some kind of support. Only then Nifty might move smoothly higher. Else, if Bank Nifty one side, it can lead higher and others are even just say flat to positive minor. That's enough for the Nifty to move smoothly higher. Here is the daily chart. Look at this. As I said, just couple of few sessions above 54,000, and actual is, if you lower it, it's come around 53,800 to 500 zone. Now, on a daily chart, let me add something over here. Observe this zone. While Nifty has crossed the recent highs or Nifty has started giving some good move, Bank Nifty has drifted down on a Friday. And if you observe the volumes of Friday in a Bank Nifty future, higher volumes. We have seen higher volumes in Nifty couple of days before Friday. That's sorry, on Thursday. In Bank Nifty, the higher volumes were on Friday and it was a selling side. So once Bank Nifty crosses 52,000, this recent highs or a consolidation range high, or 51,000, sorry, 900 being a future high. So give a round figure 52,000. That would be a good trending upside move. Till then, it does not make sense to be on a long side in a Bank Nifty here unless there is some good bot reversal on intraday basis. Watch out for this level 52,000 in Bank Nifty and 50,000 on a lower side immediate for a big breakdown. If one is looking for immediate sell side on a Bank Nifty, then these lows of around 50,850 or 51,000, if it's sustained below 51,000 in Bank Nifty future, one can look for the shorts. Observe this EMA. This is 200 EMA on a Bank Nifty spot chart. Bank Nifty did not sustain below 200 EMA since long time. While in the recent slide, if you compare the same thing, Nifty did slide below that. In fact, when I mean by slide, it has closed below that. Once, twice, again here, again. But Bank Nifty did not break that. Someone was defending it. This defense is just for a temporary bounce or temporary holding, or before trapping everyone and before a big breakdown. Don't know the reason. Let the biggies decide that. But for us, the important is in a Bank Nifty, 52,000 on a higher side, 50,000 on a lower side, which is going to give it some good opportunity.